St. George Bank Home Loans. If you're thinking about refinancing to St. George, or even if you're an existing customer and have noticed your St. George home loan interest rates increasing, then this is the video for you. Today, we're going to cover off all the perks St. George will give you if you look at refinancing, including the cashback you can see on the screen. And if you're an existing customer and you've noticed your St. George interest rates going up and up over the last couple of months, this video, we're going to walk through step by step on how you can renegotiate with the bank and get a better interest rate with St. George. St. George Bank are a fully owned bank owned by Westpac. They operate in a couple of different brands, Bank of SA in Adelaide, Bank of Melbourne in Victoria. Fundamentally, it's the same bank and similar products, and the processes we're going to go through today are the same across all three of those brands. What are some of the rates and what are some of the deals if you are looking at refinancing to St. George? Well, you might have spoken with St. George or seen your broker talk about them. They are offering some pretty chunky cashbacks. You'll get a $4,000 cashback if you refinance a home loan to St. George. Obviously, a limited time promotion, and you have to have a minimum loan amount of $250,000. There's obviously some terms and conditions, and you need to for the 31st of January 2023 at this point. So generally, it costs about sort of $800 to $900 to refinance. How can I benefit from refinancing? In general, the main reason people refinance is to get a lower rate. What tends to happen with a lot of banks is as you become a customer for longer and longer, they kind of give better deals to newer customers, and as an old customer, they forget about you. So over the years, your interest rate, which might have been amazing, your deal might have been incredible 2, 3, 4, 5 years ago when you initially got the home loan, had sort of gotten less good over time. They sometimes don't pass on as big a discount to existing customers and ends up costing you more. The main reason, the interest rate, a lot of people are like, oh, what's the difference? 4.55%. It actually helps you pay off the home loan faster, and it saves you a substantial amount of interest. So, for example, using the ASIC mortgage switching calculator, if your interest rate's 5.5%, the new loan's 4.5%, obviously your repayments are going to be lower. So the minimum repayment is going to go down by about $300 a month. But if you kept making the extra repayments like you are at the moment, say at the 5.5%, you're going to pay off the loan 5 years quicker just by refinancing. So it's kind of win-win if you think about it. The other reason that people look to refinance is you might look to sort of consolidate credit cards, you might consolidate personal loans and different things onto the home loan, which can kind of help make your repayments a bit more manageable rather than having lots of things all over the place. I guess the caveat with that is it can end up costing you more. If you've got a personal loan, for example, that might be repaid over 3 years and you put it onto your home loan, you're extending the term from 3 years to potentially 30 years, and it can cost you more even though the interest rate's a bit lower over time. So you definitely want to get a mortgage broker, something that we help out with a lot, viewing that and making sure it makes sense. The third reason why people refinance, especially at the moment, is accessing equity. So in other words, your property value might have gone up. You might have bought a home for $500,000, 5 years ago. It's gone up to $800,000. So it's gone up by $300,000. The difference to that $300,000 is your equity, and the banks will potentially lend up to 80% of that value. So it means that you can potentially pull that money out. You might want to do renovations around the house. You might want to buy an investment property. There's lots of things and lots of benefits of looking at refinancing. And like I mentioned earlier, with some banks like St. George, they'll offer a cashback. So it'll cost you money to move banks, and that cashback can be pretty compelling. It can help offset any cost of moving and even just the pain of having to set up new direct debit accounts and stuff like that. How the cashback works. Now, you want to check this for terms and conditions. A lot of banks have different criteria. Generally, it's like a minimum loan amount. So St. George is $250,000, but with different banks, it's higher. Some of them are $500,000, some are $750,000. So be careful of that. You generally have to have a new bank account set up with the same bank. So with St. George, you need to have a St. George transaction account set up with your home loan. You need to kind of use it, so you have to have your pay generally put in there for a couple of months, and they'll pay it within 60 days of settlement, so within 2 months. So keep that in mind. With refinancing and switching, you may need to be out of pocket sort of $800-900 for up to 60 days before the bank pays you that cash back. So it's worth keeping in mind there. Financing, what does it actually mean? Well, with the benefits, it actually means switching banks. So you're going from Bank A, your current bank, you might be with ANZ, you might be with Suncorp, Citibank, whoever, and you're moving to St. George. So that is what refinancing means. What I was trying to actually get asked a bit is like how long the refinance process takes. From today, for example, if you're starting, you get in touch with us, like, yep, I want to refinance my loan, to when you're at the new bank, takes about a month. Sometimes, a little bit longer if the bank's slow or that sort of thing. But yeah, pretty much it takes like a month, a little bit over, from today, the first of, I don't know, whatever month it is, November to, December. The other thing you have to be aware of is for some banks, they don't pay the cashback. If it's an investment loan, they'll only pay it on that loan that you're living in. With St. George, they don't mind. They'll pay it if you're refinancing an investment loan. They'll pay it on if you're refinancing a home loan, and it's one per person. Previously there were some banks that were doing it sort of per property, but at the moment it's just one during the 12-month period. There's some exclusions that you need to be aware of with the St. George home loan refinance cashback. It's not available if you've got a home loan home that you live in with interest only repayments. It's probably less common. If it's an investment interest only, it's still okay. It excludes switches from other sort of Westpac owned banks. So, Westpac, if you're going from Westpac to St. George, you won't get it. If you're with St. George, they're not going to give you this cash back, unfortunately. If you're with Bank of Melbourne, Bank SA, Rams, which is also Westpac owned, Westpac branded home loans, there'll be no cash back. So it has to be other banks. And it's a similar case, like if you're with Commonwealth Bank and you're going to Bank West, it's a subsidiary, they won't pay it because it's kind of the same bank. So keep that in mind if you're looking at cash backs to make sure that you're eligible. And like I said, you can only do one every 12 months. What is fast refinance? That's another thing. So a fast refinance is just a quicker way to refinance. So typically the process would be, do an application with St. George, say 2 weeks later they approve your loan. At that point, generally you'll send a form to your old bank. So you'll say, I don't know, Commonwealth Bank, see you later, I'm going out of here. And then once you sort of send that form to Commonwealth Bank, they can take up to 10 to 15 days to sort of process things. So it kind of slowed down the process. And if you need the money quickly, you might be doing a renovation, you might have builders queued, you might be trying to get stuff done before Christmas, you want it to happen quickly. So the fast refinance changes that process where, the bank approves your loan, they issue the doc, so you're sort of week 3, and then they can be ready to settle 2 days later. And they do it without having to formally sort of move the mortgage in the background from Commonwealth Bank to St. George. Process called fast refinance. They do all this stuff in the background that they kind of hold the title and put a caveat until they move it from Commonwealth Bank. But the long and short of it means you get your money a lot quicker, you move banks a lot faster, and you're not having to wait for your existing bank, in that example again, Commonwealth Bank, to process what they call the discharge request, which can take delays. And sometimes, around Christmas time, if there's public holidays, they can blow out, and they don't treat a refinance as high a priority as, say, if you've got a purchase or you're doing construction, because there's deadlines and people need to move homes. With the refinance, they kind of realize it can take as long as you want. Like as far as savings and I guess some of the home loan interest rates that with St. George, be careful of as well, is a lot of times the banks are advertising an LVR of 60 to 80%. Be wary of that. Generally, you'll only refinance if your LVR is below 80%. Most people typically won't pay lender's mortgage insurance. It won't make sense to pay $5,000-$10,000 to pay lender's mortgage insurance again to refinance, unless you're accessing equity by investment property, and there's a couple of caveats like that. But if you're just doing a straight mum and dad refinance dollar to dollar, you've got an investment property refinance dollar to dollar, it's not going to financially make sense to refinance and pay lender's mortgage insurance. Based on on their own calculator, if you're paying 5.5%, you could save that much a month, and potentially over the life of the loan save $68,000. So it's pretty substantial. Costs of refinancing, broadly speaking, you've got to pay your existing bank's discharge fee, which is about $350. You've got to pay your relevant land title sort of mortgage discharge fees, which is usually about $200 or so, depending on the state. And you've got to pay the new St. George Bank setup fees. So basic home loan, that's $100. On the package home loan, that's $100, plus you pay the package fee of $395. It has the offset account and everything else, so just keep that in mind when you're sort of looking at this. On the basic home loan as well with St. George, they do have a $600 application fee, but it's waived on loans over $150,000, and all pretty compelling. Like if you're looking at getting a sort of cheaper home loan rate, the thing that they do, well, a lot of banks are pretty guilty of this. On their website, they generally won't have their best advertised rates, or they'll sort of have interest rates based on having a really big deposit. And the main reason they do this, unfortunately, is not to sort of upset existing customers. So you might have had a home loan with St. George for ages, you might be paying 5.4% or something worse, and not really know, it's not really clear on their website. The reality is they actually offer much better discounts in the background, but on the website they sort of don't advertise it to upset customers. So if you are an existing customer, what can you do with St. George? The first thing I would suggest is you give St. George a call. Retention team on their number, I'll include it in the comments below. But yeah, you call up, ask to speak to the retention team, say you've been offered a better deal, say with ING or someone else like that, and you're going to move banks. Typically, they'll try and retain you and say like, oh no, please don't go. We're going to offer you 4.5% or something. And then the good thing is, now that you've been on the website, you can say, well, I actually can see you're literally advertising this at 4.19% for new to bank customers. I want you to match that. The only tricky part that happens here with banks is if you bought a property, say that example before, I bought a property a while ago for $500,000. It's gone up to $800,000 now. St. George, the original bank, still have that old valuation of $500,000 on their file. So they sometimes, in some cases, will want to get actually a new bank valuation to prove, yep, Jayden's definitely got an LVR of 80% or less. Sometimes they won't. You can try and argue with them, but keep that in mind. And I guess if they're really digging their heels in, it's time to talk to a mortgage broker. It's definitely something we help out with, because there really is no competitive pressure if you're contacting the bank directly and saying like, oh, I've definitely got this deal. Sometimes they call you bluff and say like, okay, what is it? What bank can sort of help you with that? That's one of the biggest perks of lenders, I guess. With St. George Home Loans, if you're considering them as an option to refinance, they've got pretty good branch network around Australia. They've got ATMs if you need that. Internet banking's fair. Pretty good presence online. So, and they're backed by one of Australia's biggest banks. Pretty good one to consider there. Definitely lots of perks for refinancing at Hunter Galloway. That's what we do. We're mortgage brokers. We help home buyers across Australia with refinancing and purchasing. So if you need help with refinancing your home loan, if you're considering going to St. George, if you're currently a St. George home loan customer and you're not really happy with your interest rate, want help with renegotiating or looking at other options, we'd love to help out. Hit us up at huntergalloway.com.au. Till next time, see ya.